Hello and welcome to Crypto Weeklies. In this video, we analyze the overall crypto sentiment behind the recent rally, looking at some of the targets and then overall accumulation risk for higher market cap cryptos. None of the content financial advice. Right now, the price of Bitcoin has now been above $74,300. We had maintained that as price touched this 62K level, there was always this likelihood to rally to this yellow line over here, like it did back in June 2022. The prior year's support, which was in June 2021, rally came to that level 1 year later. Similarly over here, late March 2025, price did go to that sub 80K level, and then 1 year later, now in March 2026, there is a rally potential to this yellow line over here. This yellow line, the midpoint is at around 78K, but the lower point of this line is where arguably the price action has already went to. If you look at from that wick perspective, that wick drop in early April 2025, that's 75K. So again, we are at the very end of this rally. What happened in 2022 after this level got rejected was not ideal, and again it was a drop from $31,000, essentially a 50% correction to 18K. A drop from 77K, a 50% drop from 80K would be close to 40K level. But again, there is one major area of support before that, this white line over here for Bitcoin, which is at around 54K. Coming to the overall social sentiment, this dashboard, this is my own website, cryptoweeklies.com, link on the bottom of your screen. This website maintains and keeps on developing new crypto analytics related content. This word cloud, which is a narrative word cloud, looks at the last 7 days trend of what is popular in the asset class using YouTube and X or Twitter related comments in the last 7 days and content in the last 7 days to identify which direction is the wind blowing, and also looking at overall social sentiment risk. Right now, the Bitcoin related bullish narrative is back. The size of bullish narratives is higher than those of the bearish narratives. You can see over here the bullish narrative in this pink shaded region over here, and this purple shaded bearish size of the bullish narrative is influenced by the term frequency, and the overall sentiment associated with bullish narratives is higher right now. Apart from Bitcoin, ETH and XRP as well as Stellar, Solana, Cardano related narratives are popping up. The wider altcoin related narrative hasn't picked up that much, but the individual narratives apart from the Bitcoin and overall bullishness related narratives, you can see the higher cap market cap cryptos featuring over here, and their standalone narratives and their term frequencies on the ascent. You can see the top related narratives is also coming to recognition. The bottom related narrative is coming. Again, it's quite premature to call for a bottom, market cycle bottom at this stage of the bear market. The overall longer term market attention, you can see, has been creeping up. This is the month over month YouTube related views for content related to crypto. So has increased since December, and then consistently increasing from December, January and February. The March is not yet complete, but midway into the month of March, again the views are kind of lacking, but let's see if the pace picks up in the next 2 weeks. The red line over here is the monthly comments, which surged in May 2024 when the price of Bitcoin started to go up during the halving, and again the views kind of peaked in December 2024. Since then, the views are going down with time, as the price action has also gone largely at a macro level down with time. And even though Bitcoin made a peak in October 2025, the number of views in 2024 were higher. That's because altcoins were doing well in 2024 December compared to October 2025, which was largely led by Bitcoin only rally. So now that also is captured by this longer term market attention. This is sourced from YouTube views and comments. So overall, the overall sentiment risk as of February 2026 is fairly low. It hasn't gone to the lowest level that is below 20, but it's definitely not in the euphoria phases where the attention in the overall market usually indicating a peak in the horizon. So where is Bitcoin and other major cryptos? Again, based on our models, this is the accumulation zone restriction, the composite risk model. That is a crypto composite risk of all the individual models apart from the, with an exception of machine learning based price forecasts, are fed as a constituents or ingredients of this overall composite risk. This overall composite risk, when it's higher than 0.3, price of BTC has risen to an extent that the price is above the accumulation zone for the bear market, not just for ETH but also for BTC, not just for BTC, also for ETH, as well as you can argue even XRP at BNB, Sol, all of the major cryptos. Again, Doge is an exception over here, but you can see most of them, Cardano and Doge being an exception, most of them are in this composite risk where it's lower higher than 0.3. XLM again an exception, Litecoin an exception. So we'll try to analyze these cryptos as well in this video, starting with XLM, which had a decent 2024, but since that point, again, that late 2024 surge where the price, this is the model, time weighted average price based model, this white line is the time weighted average price, which is the gravity of time based action, price action, not just looking at the simple moving average for let's say 20 weeks, 50 weeks. This is since inception, how has the price been doing and what is the time weighted average price, to identify again the deviation between the price and the time weighted average price, to get a sense whether if the current price is helping you beat the clock back, entering the time at time where the price has spent very little time. So right now that's the case, as the price is lower than the time weighted average price. Price right now is at around 18 cents roughly speaking, whereas the time weighted average price is 19 cents. In the bear market, typically what happens is there is a discount of somewhere between 60 to 70%. Last time around it was at 80% in 2020, and then in 2022 the discount, that means the difference between the price and the time weighted average price, was negative 61%. This time around the lowest this discount has gone was 24%, 23-24%. I would imagine in the later half of 2026 between 30 to 40% deviation between the price and the time weighted average price to the downside could be on the cards. But in the shorter term, what could likely happen is, as the price action in the bear market of 2022 went about 16-17% higher than the time weighted average price to the upside, you might see this go to risk level 2 or 3. You can toggle these risk levels to identify the bear market scenarios. For now, I'll get rid of the risk level 1 to identify what could happen in the short term. Maybe risk level 2 or 3 might come into play, like it did back in 2022 February. 2021 ended with that risk level 3, so risk level 3 was not that much of an importance in 2022. So the risk level 2 this time around was reached in end of January 2026. There might be one more push to that risk level 2, that means price going slightly higher than the time weighted average price, but then from that point again coming to the end of the 2026 or towards the middle of 2026, the price action could likely spend some time below the time weighted average price. That means price action right now is closer to the natural state, that where the price is neither too overhyped or ignored. In the distribution phases though, as this model pointed out, any time when the risk level was greater than risk level 8, or even for that matter risk level 7, it became clear that the asset was in a distribution phase. That's because the price was deviated too much to the upside from the time weighted average price, starting with risk level 7 at around 126%, risk level 9 at 250%, and again in 2021 it was 300% at the peak. This time around, at risk level 9, 235% deviation between the price and the time weighted average price helped identify. And again, you can see how this helps filter the noise, unlike simple moving average. The time weighted average price based deviation requires sustained price action to make a shift. It measures the conviction rather than just, let's say, one god candle to the upside or one doom candle to the downside. So this helps identify, from starting from the inception, helps identify the true cost basis of longer term holder. Below time weighted average price, essentially getting a better deal than a historical buyer, a longer term buyer of this asset. And dynamic scaling levels from 1 to 10 help identify where the price action likely could go, and how overvalued or undervalued it is with respect to other times in the market. Right now, definitely closer to an undervaluation zone than an overvaluation zone, but nonetheless coming with a caveat that just because the price action is lower than the time weighted average price doesn't mean that the price action cannot go low from here. If I were to make a guess, if the time weighted average price goes to 20 cents, again looking very unlikely, but if it does go to 20 cents and let's say there is a 40% drop from there, accumulation zone, the serious accumulation zone for Stellar begins somewhere close to less than 12 cents, between 12 cents and 14 cents would be the likely accumulation zone. Right now, as of today, the price of XLM is currently at around 17 cents. So all in all, again, if we were to look for Stellar related diminished or regression based levels, the price is significantly lower than the fair value at this point, which is at around 27 cents. But what happens is, towards the end of the bear market, price action has a tendency to not just go below the fair value, but also this one standard deviation residual drawn from the fair value, which is this green line. This is a mathematically derived regression based fair value, and then applying this one standard deviation residual to it. This green line right now is at around 14 cents. The worst case scenario for Stellar is dropped to right now at around 8 cents, but this is a growing function. If we were to extrapolate it out, you would find that right now it's at around 8 cents, but again, extrapolation using the same angle of ascent would take in the later half of 2026. If the ascent continues, this could meet the dark green line could meet the price action at around 10 to 12 cents, coming to that area of confluence of accumulation between the time weighted average price model as well as this regression based model for XLM at around 12 cents. What we have over here in the forecast graph using machine learning techniques, identifying what's the potential downside. Again, the price action has established a consistent downside pattern since December 2024, even the July 2025 high. These are the weekly average prices for XLM since inception. So this 46 cents level, from that level to drop to 15 cents, one could argue has taken almost the entirety of second half of 2025 and now almost entire first quarter 2026. So somewhere between 8 to 9 months of a drop is already behind us. So similar pattern happened from that May 2021 to then again November 2021 was lower than similar structure over here, and then from that November 2021 the drop came almost 13 months later. So we are at month number 8 or 9, so 3 to 4 months of bearishness from here if the angle of descent stays the same, and 3 months later, let's say looking at an optimistic scenario, 3 months later would be April, May and June. The June level for XLM is at around 10.5 cents. That again is the machine learning based drop. If the drop were to have a similar sharper edge at that in the next 3 months, that could be a theoretical scenario. If let's say between now and then there is 1 or 2 more weeks of counter trend rally, then this green line gets pushed a little bit to the right, and then potentially the 10 cents drop to 10 cents becomes a drop to 12.5 cents, and again meeting that zone of confluence. All in all, an estimation of what the bear market bottom for XLM could look like using our all individual models. The base bear case scenario for XLM, as mentioned previously, as a confluence of the regression based risk, the time weighted average price risk, and the SMA risk, is around 11 to 12 cents, which is about, roughly speaking, 38-39% lower than the current price of 17 cents. The panic scenario, if let's say there is a severe downturn in the asset class, where XLM spends about 50-51% correction from the current price, getting the panic floor at around 8 to 9 cents. That's the worst case scenario for XLM. To conclude on a bullish note, if let's say everything goes well, 2026 provides a double bottom for XLM at some point, and then 2028 and 2029 prove to be a decent alt season related time period, that base case to the bullish side, and in the bullish environment, the bull peak estimated for XLM is somewhere between $1.90 and $2 level, which is, roughly speaking, from here 11 to 12x. If the bottom is closer to that 12 to 15 cents, from 15 cents the rally to $2 would be greater than 13x, so from the floor to the peak. So with that, I would like to conclude first by saying all of the individual risk-based models and time-weighted average price models have signaled a lower risk. That doesn't mean that the price cannot go 30-40% lower from here. Most of the models are signaling XLM to be in an accumulation zone. Its risk relative to other cryptos is right now lower, as the composite risk score would likely suggest. But if you want to keep pace of what these narratives are in store for future, please stay updated and subscribe to this channel, and also check out these charts to identify the size of these narratives. Right now Stellar has some narratives going for itself. That's why it's maintaining this presence on this narrative word cloud based on the term frequencies of these crypto related talking points or narratives. And with that, hope you enjoyed this content, hope you have a nice day, and hope to see you again tomorrow. Bye bye.